What's up everyone, welcome back to the channel. My name is Miles, and in today's video I'm going to be running you through some of the biggest trends that I am seeing in the altcoin market this week, and I'm going to be presenting a few trading opportunities for you that I think could present themselves over the next week. The market right now is starting to recover a little bit after Bitcoin dipped to the 26.5 mark, but more importantly, we have seen a slight rejection from dominance, and in the face of the altcoin starting to pick up a little bit of steam heading into this week, we're starting to see some narratives emerge. In particular, a very strong narrative coming out of China and Hong Kong, which I want to discuss today and its potential implications on the market, and I'll share my watch list with you as well. And then I also want to talk about some other altcoin narratives in the market, one relating to Bitcoin ordinals and a few others at the end, which I think are relevant heading into their own specific altcoin catalyst. So without further ado, let's get into it. Let's start by talking about China, the big story in my opinion of the next couple of weeks as we head into a very important date on June 1st, which I'm going to discuss. But before we get into that, make sure to smash the like button and subscribe if you're not already subscribed. I upload 1 to 2 times a week on this channel to give you guys market updates. Of course, that is in addition to my daily live streams over on Crypto Banter if you don't watch them. So make sure you click the bell so you don't miss a single video on this channel, because I'm going to go live when there is a big story or some big alpha that I want to present you guys, and today is one of those days. I want to talk through this China story. So basically, in order to frame exactly what this China narrative is, you have to understand what's happening in the US landscape. You have President Biden saying that we don't have to guess what MAGA House Republicans value. They're telling us, and he says, we think Congress should cut tax loopholes that help wealthy crypto investors. So taking a stab at crypto through this post on Twitter. We know over the past few months, the SEC is continuously getting more aggressive towards crypto. Gary Gensler came out and said that everything else other than Bitcoin is a security. This is in stark contrast back to when he was an MIT professor and he was actually lecturing based on pro-blockchain because he was pro-blockchain technology, and he did say at the time Ethereum wasn't a security. He has now backflipped and said that everything apart from Bitcoin is a security. And of course, over the last few months, the SEC has been going on an absolute rampage. Elizabeth Warren as well. She's a senator. She's building an anti-crypto army, as per this tweet here. And we also know that we are in the midst of something called Operation Choke Point 2.0, which essentially was a term coined by Nick Carter in the beginning of February, where he predicted that there would be a continued effort to go after crypto via limiting its on and off ramps through the banking sector. And at the time he posted this article, we had already seen a few steps taken against crypto in January and against February as well. But now, in the month of March, April, and now May, we've seen even more steps taken against crypto. CFTC action against Coinbase, action against Binance. We've also seen many of the world's biggest banks go down, and it's no coincidence that 3 of the 4 biggest collapses of all time have happened in the last few months, but all of those 3 banks have had exposure to crypto, namely Signature Bank and Silicon Valley Bank, who were heavily involved with crypto and offered off-ramp solutions for cryptocurrency. Those were the banks that went down. Coincidence? I don't necessarily think so, given the face we're in this Operation Choke Point, and the Democrats have shown that they do not like crypto, and they basically want to limit crypto, but they want to do so in a way that isn't as blatant as just saying, let's ban cryptocurrency like China did. They don't want to be that obvious. That would obviously cause public outcry. They would rather go for this more silent yet deadly approach of limiting crypto's off-ramps and on-ramps, because essentially if you starve an ecosystem of liquidity, you can kill it. And that's just going to force innovation offshore, of course, and that's the point I'm going to be getting to in a second, especially with all these SEC actions. We saw action against Coinbase, which has resulted in Coinbase actually moving offshore and starting an international exchange. Many other crypto businesses we're now starting to see relocate to other countries, potentially Middle Eastern countries, namely Saudi Arabia and Abu Dhabi and the UAE, who all have their own crypto grants. We know that the Emirates have their multi-billion-dollar fund for Web3 development, and many of these big international crypto companies and exchanges that were based in America are now considering moving over there or moving to Asia or countries that are a little more crypto friendly given the way that the US is going. And we can also see Brian Armstrong had a meeting with the UAE Minister of State for Foreign Trade. So continually making more partnerships in nations that are more friendly towards cryptocurrency. Now, Coinbase isn't the only one that has decided to leave the US. We see Jane Street and Jump Crypto, two of the biggest market makers in the world, but specifically in crypto, are now leaving the US. Now, I talked about over on Banter some of the ramifications I think this can have on the industry, because when you have a detraction of market making in the market, that does tend to lead to less liquidity. And when you have less liquidity in a market, that increases price volatility. So it does make trading a little bit harder, especially when you're trading under lower volume circumstances. Typical setups don't tend to adhere to market structure as well as they typically would during periods of high liquidity and thus high volume. So I think having a low liquidity market in general is not great. It's obviously a reflection of the market we're in, coming out of what has been a pretty deep bear market with many headwinds. For example, Luna and FTX, that has created an environment, especially a regulatory environment, that has resulted in less liquidity. So it is a function of market conditions, but having big market makers leave the market also add to the problem a little bit. So Jane Street and Jump leaving, just another sign that the US is really driving some of its major players offshore. And we know this because Jump actually said that they were looking at expanding their services internationally outside of the US. So we know that this is a US related problem and not a Jump not wanting to be in crypto problem, because they actually do want to ramp up their offerings overseas as well. Now, the SEC clearly taken a lot of actions against American businesses, and this is one of the reasons why Coinbase is leaving, why Jump and Jane Street are leaving, because, well, they're not leaving fully, they're just winding down a percentage of their trading, but essentially winding down in the US. It's because the SEC has been targeting crypto companies. I mean, we've seen the SEC charge the platform Bitrex and its former CEO for operating an unregistered exchange broker. We know they're going against XRP. There's been thousands of filings. We know that the CFTC is now going after Binance. We saw $1.6 billion withdrawn from Binance after the CFTC lawsuit, and essentially just all of these sanctions happening against US companies. So what does it mean? Well, it means innovation is being driven out of the US. It means that companies aren't feeling as safe operating in the US. And as a result, we're seeing an opportunity potentially for Asian nations, for nations in the East, to take advantage of America's loss here, because crypto is such a thriving, interesting, nascent, yet very exhilarating industry, which could potentially have huge implications on the future of basically any industry, especially fintech industries, software industries. It can really revolutionize the speed and the efficiency in which payments can be processed. I mean, we're already seeing this with CBDCs, the actual impact of blockchain. So there are many nations that are still very bullish on blockchain and don't want to give up those really smart developers and people behind building these crypto platforms, and they're going to be willing to house them and actually facilitate their growth and support them, whilst the US may not. So we are seeing now a little bit of a shift where you see the West clamping down, but you see a lot of Asian countries starting to open up. Now, namely, one of those countries is Hong Kong, a country that has, alongside China, historically been very strict when it comes to cryptocurrency, has basically flat out banned cryptocurrency until now, until June 1st, when Hong Kong is going to legalize crypto trading. Now, I want to go through a few of the major points here in the lead up to this event, because a lot has been brewing behind this June 1st date. So this year, to kind of prep this for you guys, Chinese-related crypto projects have been some of the strongest performers. So we've seen things like CFX perform really strongly off the back of Chinese liquidity provisions. Now, if you actually look at the M2 money supply, we can see that although the US has decreased its supply over the last year, we've actually seen China and Japan, so some of the Asian nations, have a net increase in their liquidity, their M2 money supply. And as a result of this, there's been heightened speculation in the crypto market, specifically on Chinese coins. But what's happening in Hong Kong, alongside China, I think is even more significant. We're seeing an opening of the floodgates. This was exemplified by Paul Chan stating, who is the Hong Kong financial secretary, that essentially they were going to back cryptocurrency technology, and they believe that it's the right time to push Web3 adoption in the Chinese administrative region. This was a major announcement, and it was a very positive sign for growth coming out of Asia. So it's possible that Hong Kong now could be perceived as the trial run by China to monitor crypto policy. Now, although I don't think it's necessarily China pulling the strings here, they'll very much be watching how crypto eventuates in Hong Kong, and maybe if it's a success in Hong Kong and some of the policy that Hong Kong implements works, then mainland China may be able to adopt policy in the future. So Hong Kong could be a trial run of sorts that paves the way for the opening up of cryptocurrency in China. That may be a ways down the line, but I think it is a monumental change. And with uncertain US regulation, I think that Asian nations could see this as a huge opportunity to welcome Web3 talent and benefit to the US's detriment at the end of the day. We also see that they have set aside $6.4 million, this is Hong Kong, of their annual budget to be put towards investing in Web3 technologies. And we saw that the crypto exchange BitGet has created a $100 million fund to focus on Asian countries adopting Web3 tech, because it said regulations in the US have forced many countries to look overseas, and recent licensing changes for crypto exchanges are considered a possible positive sign for growth in Asia. Now, let's talk about those licensing changes, which are set to take effect on June 1st, 2023, which implement a new framework for crypto exchanges to offer crypto trading to certain traders. Now, I don't think this applies to the whole retail majority of Hong Kong. It applies to select traders, but what I believe is happening over the next few months to a year is they're going to start opening up and phasing in the crypto trading offering to Hong Kong citizens, which will eventually allow citizens to trade cryptocurrency. So on June 1st, I don't think everyone has access to crypto, but they're certainly establishing a framework that will soon allow people access to crypto, and accredited investors, even retail traders, of course, will be able to do so. We've seen major banks in Hong Kong as well. For example, ZA Bank come out and declare they want to be the go-to bank for crypto startups. So it's funny, whilst we're seeing the American banks go down, the crypto banks be taken away right in front of our eyes, and we basically now have no crypto banks. We're seeing the opposite in Hong Kong, with new crypto banks actually getting licensed and wanting to support crypto startups, which is really cool as well. We also saw a Chinese state-backed firm launching 2 crypto funds in Hong Kong, so we're seeing more institutional investment now starting to come into the market. Now, what does this mean? In my opinion, it means that we have to keep a close eye as investors on new developments coming out of Hong Kong, coming out of the Asian markets. I think some of the most popular coins over the next few years potentially will come out of Asia, and a lot of innovation is going to come out of Asia. So that's the first bit of alpha I would take away from this video, that I would be looking very closely at Asian circles, and I would even go as far as to look at and monitor the Korean Upbit volume. It's as simple as going onto an Upbit volume checker, putting in your email address, and then checking out big changes in volume. Upbit volume bot on Twitter also has a good account that you can use to monitor substantial changes. That's just another bit of alpha if you want to kind of see what's happening in the Korean market. But now, as actionable information today, I think what we could see over the next couple of weeks, and probably as an extension of that over the next few months, heightened interest in Chinese-related cryptocurrencies. Now, I want to say, take this with a grain of salt, because no cryptocurrency can really be inherently Chinese. In fact, most of the cryptos I'm about to talk to you probably aren't even Chinese. They're just Chinese-related. So basically, investors think that they're Chinese, or think they have some sort of loose affiliation to China, which ends up making them a Chinese coin. So the ties could be as loose as founders from China or Hong Kong, or some of the team members are from Asia, or anything loose, like they have a partnership with the government. But any coin that has a rough affiliation to China, I think could have a decent run, especially heading into the June 1st date. So I want to just show you my watch list, which is on the right here. I've got CFX. This is known as the Chinese Ethereum. It does have a key horizontal that it needs to break. But what I would do is I would trade the Chinese coins in confluence with the Bitcoin pairs. So when you break key horizontal levels on the Bitcoin pairs in confluence with their USD pairs, then that could prime itself for nice trading opportunities to the upside. So that is my trading strategy with a lot of these coins. We have EOS, Filecoin, a bit of a looser connection. I think I've also got a more updated watch list here, which is on the right, which has Clay, key. I mean, a lot of these are just coins that have some sort of rough Chinese affiliation, but when I'm trading a narrative in general, I don't really need there to be some sort of really substantive fundamental driver. It really just needs to have general investor mindshare as being like under a general asset class, like some of these Chinese cryptos are, in order for them to perform well as investments. So obviously CFX is the main one. We are starting to see a pump. We can see on the charts we have the major dip here, but now we have the higher low starting to set in. If we can make another higher low, that would be a bullish pattern there. We can see some of the other coins. I think, we got high, we've got, a lot of these still need to break their horizontal levels, but this is starting to tick up. Of course, this is a lower low, so you do want to reclaim your previous lows in order to make a new bullish trend. So just keep your eyes on some of these coins. Keep your eye on this watch list. I'm not saying ape today, but definitely keep an eye on how these perform. And if you start getting key levels starting to break on some of these coins, I think they can be decent trades in the lead up to legalization in June, because I don't think it's a narrative that's going away. Now, I must say, this obviously has to be in confluence with the Bitcoin chart. So for Bitcoin right now, what I'm seeing is a swing off the lows, but we're still we still haven't really reclaimed on the daily. So we haven't had a daily close above the previous cluster of lows. So what I would like to see from Bitcoin is a daily close above this level, and then that can prep us for a break of the diagonal trend, which could take us back up to the 29K region. However, this could just be a pump back into our diagonal trend, which would result in another lower high, which could take us back down to make a lower low and test range high. So I'm still pretty wary of Bitcoin going down to range highs again in the 24 to 25K region. That is a scenario that still looks like it wants to play out, especially if this bigger Bitcoin head and shoulders eventuates. But in the meantime, as long as we hold above the 26.5 level, I think some altcoins can perform okay. And today's show is really more about looking at some of the alts that could perform alright. And I think China falls into that narrative dominance. Actually did have a push to the downside, starting to reclaim a bit of territory now. We're seeing, when Bitcoin pumps, dominance actually does quite well, typically. But if you're an altcoin fan, you definitely want to see the high here, the lower high, but now another lower high being set, which would be the first sign of us getting a reversal on BTC dominance, which would be good for alts. So any Chinese coin or any narrative that I'm about to speak about in this video, just remember you have to trade in confluence with Bitcoin, and you just have to be wary of the fact Bitcoin right now is in a downtrend, and it definitely can reject off this red line here. And then we're looking at range high scenarios here, especially on the horizontal. We know that this was a very key level for Bitcoin. We tested multiple times of the 25K level. We tested again, we broke through, deviated above, came back down into the range, finally broke above, and then made a new range. But if you break below that new range, then it's logical we can come back down into this zone, and that would be the completion of your head and shoulders pattern back down. So that's just something to be cognizant of. Of course, if we break we break this diagonal structure, then we can start to think a little bit differently. But just be aware, just keep your eye on the Bitcoin chart when you're trading alts. Always trade altcoins on their BTC pairs. So if I wanted to long a Chinese coin, first thing I would do is I would make sure Bitcoin looks good, all right? We're in an uptrend. Let's say we close above this level on the daily, all right? That is a good sign. Then the next thing I would look at is, all right, what coins are performing? Are there any Chinese coins? I'm also going to talk about a few in today's show yet to come that I'm looking at. Are there any coins that are looking good on the USD pairs, all right? Let's say, I'm just going to use high as an example. Let's say we reclaim and we close above the horizontal level here, all right? That looks good. Then I would look up its Bitcoin pair, and I would see if it's also looking nice on its Bitcoin pair. So is it in an uptrend? Has it just broken above and consolidated above a key horizontal? Use these three steps in confluence with each other to get good entries on alts. And that's not just relative to Chinese coins, but that's basically how you trade in the market in general. You first affirm how Bitcoin's looking, then you affirm the relative strength using the BTC pairs for a specific altcoin, and then you also line that up with an altcoin's USD chart. And if you can tick all three boxes, then that is a decent trade, just in general, as a general rule for trading crypto. So the Chinese narrative, that is a thing I am watching over the next couple of weeks, especially heading into June 1st, which is a key date. Now let's look at stacks. This is the next thing I want to talk about. So BTC ordinals, BRC20 tokens, it's really taken the Bitcoin world by storm. Now, personally, I am an advocate for it. I think that any time that you can use the technology to do something new, do something novel, and explore new use cases, that is a good thing. And I don't see why the Bitcoin network should just be limited to being this digital gold when it can be used for things like token creation and NFTs. And in fact, you could make the argument that the BRC20 standard is better than the ERC20 standard because you're actually getting inscriptions on chain. But the thing is, it's very hard to invest in the overall Bitcoin narrative. Like, what do? Okay, you can buy Bitcoin, but that's not really a great proxy bet for the growth of Bitcoin DeFi. You can invest in ordinals, but you kind of, you might not end up hitting a winner. You don't have great overall exposure to the market. You can invest in BRC20 tokens. I think that could be decent if you create a portfolio of them, but once again, you're exposing yourself to individual protocol risk, and that may not end up being like a great EV play. So for me, investing in proxy bets like Stacks become decent. An L2 play that's basically a Bitcoin layer 2. No, it doesn't necessarily capture all of the upside from ordinals, of course not, but it is in the general realm of the Bitcoin ecosystem. And for that reason, similar to the Chinese coins, it has investor mindshare as being a strong part of a narrative. Now, STX isn't the only one I'm looking at. I'm looking at RIF, which is RIF. There are many other Bitcoin projects starting to launch and that have launched that I'm considering, but Stacks being the biggest one. It's the leader of this trend in general. This is the one that I'm looking at. Now, from a TA perspective, Stacks is super interesting. I would love to buy some spot at 50 cents. This is a key zone that I'm looking at. I still think we get there, by the way, at some point. But there also is a scenario in the short term that we break above on the daily and hold above the 6-8 zone. Then if we get a diagonal break of this level and a retest, this could be a great zone to actually stock up some stacks for a push to the 83-cent region, maybe even if you trade that or trade it to the upside. So I'm looking at a stacks trade if we can reclaim these lows. Of course, we did make a lower low. We also are making lower highs. If we do get a break of this diagonal trend and a test above, you could almost do 3 entries. 1 entry here on the test of the horizontal, another on the breakout, another of the diagonal retest. Move your stop up to make sure you're not exposing yourself too much to the downside, and then of course look for this continuation to the 83-cent zone. That's my bullish scenario for Stacks. You also want to take a look at the Stacks BTC chart, which I can chart for you right now. We'll take a look at it. Let's get it up. Here we go. I would wait for reclamation of the 2795 level, which would, it's a pretty substantial move. Not massive, but 17% for the upside. That doesn't mean Stacks is going to move 17% on its USD pair. Bitcoin could drop or just move a bit slower than Stacks, and then on a correction, Stacks could hold up better and it could make up the ground. But what I would like to see for a much bigger move to the upside would be a break above and a hold of this level. Now, I might take the USD trade without the Bitcoin pair lining up, but for a really big entry, I would love to see us reclaim this zone on the Bitcoin pair as well. So Stacks is one that I'm watching. Another coin that I'm watching is Litecoin. Now, here's a little bit of history for you. Now, keep in mind, this is only a sample size of 2, so it doesn't have much of a historic basis for us to substantiate our thesis here, but it's enough for me to take a little punt, all right? So I'm not 100% sold on this, but it's enough for me to take a punt, and that is the fact that what typically happens with Litecoin is that it reaches the halving, which, by the way, is 80 days away right now, around 15 weeks away, and what happens is 7 weeks before the halving, that is when Litecoin tends to top, and what we're seeing now is that we're 6 to 7 weeks away from that middle period when it tops. So if it's 15 weeks away, in the middle we know it tops, we're still 7 weeks away from this red dot. So on the chart, we are at this red line, this vertical line. The vertical line is where we currently are. The red dot is where Litecoin typically peaks, and we can see we're still 6 weeks away from that. And then the blue line is the actual Litecoin halving. Now, in the previous 2 cycles for Litecoin, we've seen a 485% pump. We've seen a 131% pump. Now, what we're actually seeing is very similar to other cycles where you've had a dump into this red zone, then a pump, then a dump, a dump into this red zone, then a pump, then a dump into this red zone. Will Litecoin pump and then dump? I mean, look, it's only a sample size of 2. I'm very wary making big claims based on limited data. I always think, with the analogy of the scientist, right? If a scientist is doing an experiment for a new cosmetics brand and they're testing on rats, do they want to test the efficacy of a product on 2 rats, or are they going to test it on 100? No, they're going to use 100, right? They want as much of a sample size as possible. They're not going to make a conclusion about whether something's good or bad after only doing 2 tests on 2 rats. Oh, it made 2 rats have skin irritation, or it must be bad for humans. No, they're going to test it on 100, 1,000, and then they're going to come up with a conclusion, right? So I always think back to that when I'm measuring crypto trends, thinking, all right, this only happened twice. It doesn't necessarily mean it will happen, but it's enough. I don't know if it just fits my bias, to be honest, but it's just enough of a trend for me to go, all right, maybe we're getting it to the place where buying some Litecoin isn't a terrible idea. Now, I look at the chart and I also see a bit of confluence here with my TA. I'm seeing higher lows are starting to form a very clear trend. We can actually buy the bottom of this trend line, and we can probably set our stops below the previous lows. Now, of course, this is going to be a huge differential. So if you are just trading momentum here, you could probably just set your stop below the diagonal and not even put it below the previous low. But in terms of trading, I don't think it's a bad area to maybe stack some Litecoin 6 to 7 weeks away from what is typically the pre-halving highs for LTC. So if we do end up breaking above the horizontal, then obviously this would be a very strong sign, because this was previous major support, by the way, that we can actually push up to the 180 zone. That would be almost a 2x from Litecoin. Will it get there? Look, it's very bullish, maybe too bullish, but heading into the halving, this is a narrative, and I think it's only going to get bigger as we get closer, and it's 80 days away now, so this is something that I would keep my eye on. The next thing I want to talk about is Arbitrum. Now, if we look at DeFi Llama and monitor and analyze the performance of DeFi Layer 1 and Layer 2 protocols over the last couple of weeks, we can see over the last month, most are actually down in terms of TVL. We can see 26% reduction in Phantom, 40% reduction in Avalanche, 10% reduction in Polygon, 10% reduction in Ethereum. The DeFi market has contracted because we did have quite a fruitful period from January to March. It's only natural you get a period of contraction after expansion. However, we are seeing an outlier, and that is the fact that Arbitrum has managed to increase its TVL during a period when not many other chains have been able to. And to be honest, the major reason for this, the major driver, is the launch of Chronos, which has injected at one point $260 million worth of TVL into the ecosystem, and is now sitting at $170 million in TVL, which has been a huge boost for the Arbitrum ecosystem. You've also seen ecosystem incentives starting to prop up the chain, because a lot of these protocols are now receiving tokens, which they are basically paying out to users that use the platform in the form of an airdrop and increased rewards for LPs and certain pools, etc. Radiant being a beneficiary of this. Many other of the smaller protocols also having huge increases. But I want to look a bit further at Chronos, because this has been the major driver behind a lot of Arbitrum's TVL growth over the last few weeks. And as I said, it topped out around 260 million at 256. It has declined slightly, but it's holding up fairly well. Now on the channel, I've talked about Chronos in the past, and I think if you have been voting and bribing, you would have received some nice rewards. I'm just going to show you how to vote and bribe in a second. But I've been lucky enough to be invested in this. So full disclosure, I'm invested, and also lucky enough to be advising the team. So I've helped them with strategy. Obviously, I'm a token holder, so I must fully disclose that. And I guess you could consider this like a paid partnership to some extent. So obviously take what I say with a grain of salt, but I wouldn't be talking about project if I didn't like it. And I do think it's a good project. So I want to just talk about it a little bit and the reason why it's been able to be so dominant in terms of TVL on the Arbitrum network, and some of the major learnings from Chronos. So Chronos I've talked about in the past, so I might take a little different angle on today's show, is essentially a solidly forked, so it's a VE33 protocol, but they implemented a major change to your typical solidly forks, and this is of course the maturity adjusted LP return. So traditional VE33 models don't often provide sufficient incentives for LPs to commit to a project for the long term, and although token voters are aligned with the project because of the lock function, liquidity providers can leave at any time. So in a typical VE33 model, if you're an LPR, you can leave at any time, basically no incentive for you to stay after you've done your business. What we've witnessed in other implementations is the counter-cyclical effect supporting the price of the emission token that's disrupted the moment the price declines, and liquidity providers withdraw their liquidity, which reduces TVL and reduces the token value. Basically a negative feedback loop / flywheel, because LPs are not incentivized towards the long-term health of the project. Chronos fixes this by introducing maturity adjusted returns, which basically allow you to earn boosted emissions over time. So LPs are more inclined to keep their liquidity through temporary CHR price volatility. Basically how this works is the longer you hold a position, the more it matures. So if you hold it up to its 6-week period, you will get the maximum benefit from holding that position. And of course this increases LPs' willingness to hold the token and allows them to basically stay aligned with the incentives of the Chronos exchange, because basically the longer they hold their position, the more it matures, the more they earn. So it basically increases their revenue the longer you hold your liquidity in Chronos, and offers you increased rewards for being early to newly launched pools, allowing increased revenues whilst being ahead of the maturity curve. Now, I want to show you what this looks like in practice. So I hold a Chronos position, and what I can actually do if I hold Chronos NFTs, or the Chronos token v Chronos, so basically what you would do is you would go into the lock tab on the website, you would lock your Chronos position, and now this would give you access, because Chronos is the governance token, the NFTs act as governance, this would give you access to voting on pools, so you can choose where you direct emissions towards. So I can vote just like a normal solidly fork towards the pool that I would want to vote towards, and you can see the rewards in the right can give you an idea as to how many rewards you'll be getting. But if you vote towards a pool, you will essentially be getting bribes. So the more tokens you have, the more bribes you're going to get. So you're essentially paid for voting on the platform. And with Chronos being a relatively new project, typically what we see from Solidly Fox is during the beginning stages, the bribes are pretty crazy. So I'm expecting some decent returns here. And I would look into Chronos a little bit further if you're interested in this kind of thing. And look, even if you don't want to provide Chronos liquidity, because I'm not suggesting you buy the token if you don't want to, of course, you have to make your own investment decisions. There are some pretty nice APR-based pools here. If we look at ETH USDC, it pays up to 20%. You'll see here the longer you hold your position, the more it matures, the more you actually earn. So that's the important maturity adjusted LP side. That's why the APRs start lower and they get higher. So it incentivizes you to provide liquidity for longer, right? So you've got the ARD USDC pool as well, paying up to 46%. There's some pretty high paying crazy pools. Chronos USDC, 300 to 615, which is nuts. And you've got ETH LUSD, 21 to 43. Many pools you can go through their website and look at the pages of their pools. But I thought I would mention that to you guys today because there are some decent opportunities here, especially while the project is newer. The APRs typically are higher, and that will allow you to get some decent yield in your position. The other thing to note is that if you are locked in a position, you can sell your NFT on the secondary market to retain liquidity. So unlike other Solidly Fox where you're locked into a position and you can't sell, with Chronos, you can sell your position on the secondary NFT market at a discount because there is obviously factored in the vesting period into the calculation whenever someone's buying. At a discount, you can sell your position and actually maintain liquidity if you want to get it out if you're locked. So that's another cool little feature. But I recommend checking Chronos out. Of course, I am a token holder there. I'm also advising Chronos, so just want to be fully transparent about that. But yeah, it's been a good one to be a part of, a very cool protocol to be a part of for the last few weeks. Now I want to talk about another project that I'm a part of. Now this is very, very, very exciting. So I joined this project as an advisor. I am not paid to shill this at all. I'm just an advisor. Of course, I am aligned with the project in the sense that, I own a percentage of the token supply, but I'm not paid to shill or doing anything dodgy. I just, really believe genuinely in this project and think it can be a huge opportunity for new users, maybe even yourself, that want to get involved in this project. Now, what it is it's called Commonwealth, and it is a platform that allows retail investors to access the deals, the kind of deal flow that previously only VCs and big KOLs would get access to in this space. So let me contextualize this. If you're a big VC and you get a new network like Aptos coming to you, and Aptos might want you on their cap table, they'll offer you a percentage of tokens at their seed round price, so a much cheaper price to get in on the project before it launches. Now, typically retail can't get access to these deals, right? Like your Solanas, your Avaxes, your Phantom, your even Ethereum, all these early ICOs that occurred, they were only really on the table to insiders or VCs or maybe even KOLs if they're lucky. That's obviously a huge problem because retail is restricted to deal flow and you end up paying premiums on the secondary market. Well, what Commonwealth does is it has a panel of council members which essentially have access to deal flow that provide an avenue for retail through the Commonwealth funds to get access to that deal flow. So you can invest in Commonwealth funds and get access to the same deals that those guys are getting because they're on the council. So you're getting a way to get into early stage projects that no one else can. And when Commonwealth approached me, it really took me by surprise because basically the entire project is non-VC backed. It's completely community driven. Most of the fees are actually given back to the NFT holders. So holders basically control the whole project because it's structured as a DAO. And it's basically a project entirely geared towards helping retail get access to deal flow and also get access to the expertise of the council members who are voting on how they manage the funds of the Commonwealth made funds. So it is pretty cool. It's pretty cool. I would recommend reading a little bit more about it. I've left a link in the description if you want to. It's called Commonwealth. I'm very excited to be partnered as an official advisor, as you can see here. As an advisor, I'll be helping the project strategically. I'll be sitting on the council, so I'm going to be helping out there as well. I'm also going to be helping them on growth strategy, marketing strategy. Through my years in the space, I've learned a thing or two about how to actually, go about building community as a project. So I think I can offer a bit of value there as well. And overall, it's just an exciting thing to be a part of. I think a fairly noble mission, actually, being able to kind of give back to the community in the sense that, we can kind of form a community of passionate crypto people that kind of can all get access to pretty exciting projects. So I think it's cool. Now, you're probably wondering, how do I get involved? They have an NFT sale. So basically, what they're going to be doing on the 22nd of May is launching their Genesis Series 2 NFTs, which will receive 3% of the protocol revenue and also will receive an allocation of Commonwealth tokens, which is the governance token of the platform if you hold the NFT. So the way to get into the project, unless you want to buy the NFT on the market when it buy the tokens on the market when it launches, is to mint an NFT. So this is happening in 6 days. If you want to mint an NFT, I would, I'll be giving away whitelists on one of my streams, either here or on Banter over the next few days or week. I know whitelists are limited, so it's first come, first serve in terms of whitelist. But if you want to stay on top of the loop, make sure to go to Commonwealth's Twitter, give them a follow, turn on post notifications so you know when the mint's going live. Because what they're doing is they're only going to do 99 at a time for 99 minutes. So you'll have like basically a 2-hour window to mint your NFTs once a day, and then after that, it's done. So once the NFTs are minted, they're minted, and those will be the Series 2 holders, and they'll get access to tokens. As you can see here, you will get roughly, max 8,712 wealth tokens per NFT. Could be less depending on how many NFTs are minted, and then that's that. So it's a $99 mint per NFT, so that's the barrier to entry. It's $99. Of course, you can mint more if you would like. I believe there is a limit on how many you can mint, but I think it's quite a lot. I think it's like, I've forgotten off the top of my head, but I think it's a decent amount. So if you want to invest more, you can. Of course, you can also buy it in the secondary market, whatever you want to do. Now, I'm not forcing you to buy it. I just want to offer you guys the opportunity to get in if you would like to. Whitelist spots will be limited. But basically, I'm advising, and I think it's a really cool mission that we're embarking on. And if you want to join this vision as well, then I wanted to provide you guys the opportunity to get access to it. My camera keeps going out of focus, but come back. There we go. Just thought I would mention that as well. All right, so that is that. And let's just quickly run through the charts one more time, see if I'm seeing anything. Ethereum needs to break above its range high. This is something I'm actually monitoring quite closely. So we're currently below. I would love to see ETH reclaim 1850. ETH being the leader of the alts, that would be quite an important level to reclaim. Also keep in mind, this could be a bearish rejection. We could come back down. I think the 1680 level for Ethereum is super major. That's what I'm looking at. In terms of ETH BTC, this is a chart that I've been tracking a lot to determine altcoin strength. Still in an uptrend. I think now it's logical that we come back down to retest 6.4. This will be a bullish retest to look to make another higher high on the shorter time frames for Ethereum. So that's what I'm seeing there. And I think that's basically it for now. Remember to screenshot or save the Chinese list to keep your eye on that narrative as we head towards June 1st. And yeah, I think that's it from me today. I will see you later in the week. Links in the description to all the resources for everything I spoke about. And I will see you in the next video, probably at the end of the week. Peace out.